Hello and welcome to Bitcoin Dorks, your daily source for cryptocurrency news and market analysis. Today, we'll be discussing Bitcoin's transaction count cycle and what it means for the future of cryptocurrency. According to recent data from CoinMarketCap, Bitcoin's transaction count has reached a cycle high, indicating that the network is currently experiencing high levels of usage and adoption. But what exactly is a transaction count cycle? Simply put, it's a measure of the number of transactions processed on the Bitcoin network over a certain period of time. This metric can be used to track the overall health and activity of the network, as well as to identify potential trends and patterns. In the case of Bitcoin's transaction count cycle, the data suggests that the network is experiencing a surge in usage and adoption. This could be due to a variety of factors, including increased interest in cryptocurrency from institutional investors, growing acceptance of Bitcoin as a payment method, and the ongoing impact of the COVID-19 pandemic on traditional financial systems. So what does this mean for the future of Bitcoin? Bitcoin has been the subject of much speculation in recent years, with many investors wondering whether it will continue to rise in value or eventually collapse. However, there are several factors that suggest that cryptocurrency has a strong future ahead of it. One of the key indicators of Bitcoin's strength is its transaction count cycle. This refers to the number of transactions processed on the Bitcoin network over a given period of time, which has been steadily increasing over the years. Many analysts believe that this upward trend in transaction counts is a bullish sign for Bitcoin, as it suggests that there is a growing user base and demand for the cryptocurrency. In addition, Bitcoin's underlying fundamentals are seen as strong, with the decentralized nature of the network making it resilient. In fact, the cryptocurrency industry is still relatively new and untested, and there is always the risk of unforeseen events or regulatory changes that could impact Bitcoin's future prospects. These factors, combined with the growing acceptance of Bitcoin as a legitimate asset class by institutional investors, could potentially profits and security. The demand for Bitcoin is likely to increase, driving up its price. Absolutely, it's important to note that there are risks to consider when investing in Bitcoin. Cryptocurrency is notoriously volatile, with its price subject to sharp swings and market corrections. On the other side, regulatory changes or government crackdowns could have a significant impact on the cryptocurrency's value. Nevertheless, for those who believe in the long-term potential of cryptocurrency and blockchain technology, the current transaction count cycle is a promising sign. One important thing to note is that the transaction count cycle is not a perfect predictor of Bitcoin's price movements. While there is some correlation between high transaction counts and bullish price action, it's important to remember that many other factors can also influence the cryptocurrency's value. For example, Bitcoin's price is heavily influenced by supply and demand dynamics, which can be impacted by a wide range of factors such as investor sentiment, geopolitical events, and changes in government policy. Truly speaking, the crypto sentiment can have a big impact on prices. Moreover, there are still good reasons to view Bitcoin's current transaction count cycle as a positive development. For one thing, it suggests that cryptocurrency is gaining traction as a mainstream payment method, which could help to drive adoption and increase its utility value. The fact that Bitcoin is able to handle high transaction volumes without significant delays or network congestion is a testament to the robustness of its underlying technology. Unlike traditional payment systems, which often suffer from slow processing times and high fees, Bitcoin is designed to be fast, efficient, and low cost, making it an attractive alternative for consumers and businesses alike. But there are also potential downsides to Bitcoin's growing transaction volumes. One concern is that the network could become congested and slow down as more users try to send time. Undeniably, there is always the risk of hacking and security breaches, which could compromise the integrity of the network and erode user confidence in Bitcoin. To mitigate these risks, developers are constantly working to improve Bitcoin's underlying infrastructure and security features. For example, the Lightning Network is a Layer 2 scaling solution that allows users to send and receive Bitcoin transactions instantly and cheaply without clogging up the main network. Another area of innovation is in the development of new privacy features, which can help to protect users' identities. Bitcoin's privacy and fungibility, making it a more attractive option for users who value financial anonymity. In conclusion, Bitcoin's transaction count cycle is a key metric that can be used to track the health of the network. The current cycle high is a bullish sign for the cryptocurrency, indicating that it has strong underlying fundamentals and a growing user base. While there are always risks to consider when investing in cryptocurrency, those who believe in the long-term potential of Bitcoin and blockchain technology should view